For this video, we will be discussing insurance. And a home insurance policy is broken down into 6 different parts. First is the dwelling, which is the house and any attached structures like a garage. Then you've got other structures coverage like sheds, even pools would be considered other structures. Personal property, additional living expenses if there's a loss and they have to vacate the property. Personal liability coverage, and then finally medical payments. There's a term called actual cash value, and unless the policy says otherwise, for actual cash value, it's based on the dollar amount it would cost to replace something minus depreciation. So if somebody owns something for 10 years, they're going to have 10 years of depreciation on that, versus replacement value, which would be the cost to replace something. There's several different types of policies, HO2, 3, 4, 5, and 6. HO2 is known as basic form, and everything you see on the screen here is what they cover. If it's not listed on the policy, it is not covered. And keep in mind, when it comes to homeowners insurance, flood insurance is never covered. That's a separate policy that has to be purchased. HO3 is the next level up, and that's called broad form. And unless it's excluded, something that happens to the property as a peril is covered. Then you have HO4, which is renter's insurance, which is liability coverage for anything that happens on the property while the tenant is occupying, but it also covers their personal property if there's a loss. HO5 is known as comprehensive form insurance, and that covers the property on an open peril basis. And then unique to condos or townhouses with condo ownership is HO6. Typically, the master policy for the HOA covers the structure if there's a loss. The homeowner purchases an HO6 policy, which would then cover their personal property, any liability, their loss of use, and then they need to make sure that they have a loss assessment, which helps cover whatever the master policy limits are that are exceeded, and then medical payments. It's important you cover with them, if they have a condo, to check the master policy to make sure what is covered. If there's a basic walls in policy, it may only cover original fixtures and finishes, which could lead to serious loss that they would have to be responsible for the difference if they did any upgrades. Things that a landlord specifically should look at is loss of rent. If a tenant has to be out of the property due to some sort of a loss. Have an umbrella liability policy, a general liability policy, and they need to ensure that the property manager is an additional insured. They should have fire and multi-peril, and of course, if it's a condo, it should be HO6. They should require a tenant to have insurance, and then they should have flood insurance if it's in a floodplain. Property managers should look at having property insurance for the property that they're either renting or they have a mortgage on for their business, any loss of income for the principal in the business, having a workers' comp and employee liability policy. They might want to consider commercial automobile, especially if they have in-house maintenance, and then of course having general liability. In addition, they should be named as a co-insured on all liability insurance for their owners. There should be an indemnity clause in the lease to protect them if they are found negligent. They should insure their office contents and equipment, and then they should look at employee honesty insurance as well as E&O. As always, best of luck studying for the exam.